I think that people are underpricing the upside in equities, in crypto, and everything. They don't realize how badly all these governments need to print money. Yes, it's going to end in absolute Armageddon at the end of the cycle, whenever that is. But I don't think we're there yet. Governments are only starting to get the mojo back about I'm going to print money to buy defense goods, to hand out handouts to the population. So I think we're in this first inning of this massive change in the how we organize this global society, and therefore I don't believe in the 4-year cycle. I believe that we can continue ripping through, $150, $775, $200,000 Bitcoin because of this massive macro overlay of what is happening right now between now and the end of the decade.
Let's analyze and explore the powerful and unifying theory of macro investor Arthur Hayes, who argues that there is no fundamental difference in the core belief system of a TradFi bond trader and a crypto degen. At the end of the day, both are making the exact same bet that when faced with any crisis, central banks will inevitably print more money. The only difference, Hayes contends, is the vehicle they choose to express that view. While the TradFi world levers up bond positions, the crypto world has simply chosen the faster horse. Bitcoin, he argues, has been the single best performing asset in history on this currency debasement theme, and it's not even close.
Subscribe to Daily Bitcoin Trends for expert insights, real-time market updates, and proven crypto strategies. No hype, just smart analysis to help you make better decisions in crypto.
Bitcoin is the best performing asset when you think about currency debasement ever, right? Okay, yes, the S&P 500 is up in dollar terms, but deflate that by gold since 2009, the S&P has not recovered its gold price from 2008. Deflate the housing market by gold, again, and not anywhere close to where it was. Tech stocks are probably one of the only things that have, big US tech is probably one of the only things that's done well, deflated by gold. If you deflate things by Bitcoin, it's not you can't even see it on the chart. It's just so ridiculous about how well Bitcoin has performed. So, I got asked this question, like, why is there a difference between TradFi and crypto? There's not. Actually, when you talk to a TradFi person and sort of really get down to what they believe, what do they believe? They believe the same things that we believe. They believe that, when something happens, the Fed, the Treasury, the BOJ, the ECB, the PBOC, the SNB, they will print money. And what happens when they print money? They buy bonds. So in their mind, because they know bonds and they did a CFA or they went to business school, okay, well, if I buy the 10-year at 5% and it goes to 4% and I lever that 30 times, I become Ray Dalio, right? That's their mind. That's all he did. He went long 30-year bond on leverage. That is interest rate parity. I can't shit on them. Good on you, for running that fucking trade, but that's the trade. We all believe in the same things. It's just that crypto is the faster horse. Bitcoin has been the best performing asset on this currency debasement theme across any asset class. So it's not that we have a difference of opinion. We believe the same things. We believe the money will be printed. It's just that we in crypto choose an asset that performs better. And so if you take a very short time horizon, like, I don't know, from a couple months ago, and you say, oh, why isn't Bitcoin at 150,000? Well, I'm sorry that you bought Bitcoin 6 months ago, but for anyone who bought it 2, 3, 5, 10 years ago, they're laughing. Like, I don't give a fuck, right? I have so much outperformed the debasement of the dollar and every other fiat currency. Like, why am I being all moody that, Bitcoin is not, hitting a new all-time high every day? It doesn't matter that the S&P is at 6,700 or whatever it is. It's still down in gold terms from the crisis. So I think people need to readjust their perspective on this. If you thought that you were going to buy Bitcoin and the next day you were buying a Lamborghini, you're probably getting liquidated because it's just not the right way to think about things. I think that people are underpricing the upside in equities, in crypto, and everything. They don't realize how badly all these governments need to print money. Yes, it's going to end in absolute Armageddon at the end of the cycle, whenever that is. But I don't think we're there yet. Governments are only starting to get the mojo back about I'm going to print money to buy defense goods, to hand out handouts to the population. China is, battling with its own sort of deflation and doing drips and drabs of stimulus. They'll come around to the party too in some way, shape, or form. The Japanese have to do it. The Europeans have to do it. The Americans have to. Everyone has to do it at the same time. And we have this AI robotics deflationary effect, which could completely destroy the fractional reserve banking system if everyone doesn't have a job and now has to service all these debts. What do? Do we fully reserve the system and print money to make sure the banks are okay, or do you let everyone go bankrupt? I don't know, right? We have a lot of big societal choices, and usually when humans have big societal choices, the government chooses to print money first. So I think we're in this first inning of this massive change in how we organize this global society. And therefore, I don't believe in the 4-year cycle. I believe that we can continue ripping through, $150, $175, $200,000 Bitcoin because of this massive macro overlay of what is happening right now between now and the end of the decade. Besson and Trump need money to be printed to fund their agenda. And so the Fed's going to cut rates. There's going to be, maybe it's not direct QE, but there'll be different ways in which money is printed. Maybe it's through the mortgage market. Maybe it's through the banks lending. Maybe it's through these sovereign wealth fund deals that Trump is doing with other nations. Maybe it's through the something like $100 billion or however much there was allocated to Department of Defense as equity to then leverage to then buy stakes in resource companies like MP Materials to help with rare earths, whatever. There's so many ways in which they can provide credit to the system. And yes, this credit will positively affect some particular sectors more than others. But the best thing about Bitcoin is that we don't care where the money is going. We know that as there's more dollars, yuan, euro, yen in the world, that currency is being debased, and this asset that we own that is a fixed supply is going to go up asymptotically.
The centerpiece of Hayes' current framework is his conviction that we are only in the first inning of a massive global shift, where governments have no choice but to print money to solve every societal problem, from defense spending to populist handouts to the deflationary pressures of AI. This macro overlay, he argues, is so powerful that it has effectively killed the traditional 4-year crypto cycle. He believes investors are dramatically underpricing the upside in risk assets because they fail to grasp the scale of the coming credit creation. Bitcoin is the ultimate beneficiary of this dynamic. It doesn't care where the liquidity flows, only that it is flowing, perpetually debasing every fiat currency and making its own fixed supply infinitely more valuable.
I think we're starting to get to the real meat of the cycle, middle of the cycle, because if you think about, Trump's a new president. Obviously, it's a second term after the Biden administration, and his first term, he's a very populist president. He did the biggest sort of handout to American people since Andrew Jackson with or probably LBJ with sort of the COVID stimulus checks, right? That's not a very, traditional Republican sort of measure to basically say, let's just hand out money to people, make sure that they stop bitching while we lock them in their house for the flu. And so when that happened, he is, had bona fide credentials as a person who's he wants to win elections. He doesn't have ideology behind it. So winning elections means providing free shit to people. He provided the free shit during COVID. He provided the free shit in 2017 with one of the largest tax cuts ever in American history. And he's going to provide more free shit. Otherwise, him and his, Trumpian Republicans are going to get voted out of office in 2026 and then in 2028 in the presidential election. So I think he knows exactly what he needs to do, which is provide free shit and print money. And that's what he's going to do. And now, obviously, the Fed and certain individuals within sort of the bureaucracy that is the American government have been sort of stymieing his efforts. But, domino after domino is being knocked down. And, by, middle of next year, it's going to be full steam ahead in terms of the Fed's on board, no more Powell. Maybe he's got 4 out of 7 Fed governors, and he can do some other funky things with the interest on reserves or the discount window. And you have Besson doing these sovereign wealth fund deals. You have possibly Fannie and Freddie ending conservatorship, and now they can lever their balance sheets and add about $4 to $5 trillion into the mortgage markets, allowing people to re-leverage on their houses. So yes, if the consumer runs out of cash, what does the American consumer do when they don't have money? They borrow it. And so if I reduce the cost of money, then you can borrow more. And so I think that's why the price of money in this instance matters. Now, I'm more of a quantity of money guy, but I can see that, you can say the American consumer is tapped out, the housing market's, a bit overbought. Well, if I cut rates from 4.5 to 2, well, then you're going to take more leverage and buy more stocks and, max out that credit card and buy a new car and take out a home equity loan. So I think that's, a very short-sighted sort of explanation if you sort of believe that the Fed's going to start cutting rates and Trump is going to unlock all this liquidity on Fed balance sheets, the mortgage market. And, another thing that people are not really paying attention to is Wells Fargo has just been paroled out of jail. They were not allowed to increase their balance sheet for many years after the whole fiasco that the criminal sort of customer shit that they did back then. I don't remember exactly what it was, but I think in middle of June or early July of this year, they were finally allowed to increase their balance sheet. There's a very famous macro analyst Zoltan Pazar, who estimates that they have about $450 to $500 billion of capacity on the balance sheet to buy treasuries and other debt securities now that they can grow their asset base. And so you have another liquidity engine in the commercial banking system in the United States. So I don't really care a fuck about the real economy. All I care about is the credit, and the credit's going to flow, and it's going to flow into Bitcoin. I think that Hyperliquid next goal is to beat Binance. How does Hyperliquid get from here to the number one exchange of any type globally? Is it a fait accompli? Of course not. It's going to take a lot of work and luck and all that sort of stuff. But that's what I'm betting on, and I think it's moving in the right direction. The amount of energy that we've seen on these proposals for the USDH from every major stablecoin issuer tells you how integral Hyperliquid is to the trading ecosystem within crypto within basically 18 months, if you want to think about it.
Yeah.
So the forward on this is amazing. And as more people learn about this, it's only going to get better. The one thing that gives me a bit of pause is the massive unlock of the team tokens in November. So we're going to have to see how that sort of plays out in terms of positioning. But as I said in the presentation, my 2028 target is in the 100x plus sort of return if we get this sort of massive move into stable coins. So that's sort of why I think
here.
Yeah,
on hype.
That's what I went on stage. And
so you think there'd be like a $5,000 token?
Yeah. In Bitcoin, you've got MicroStrategy. It's kind of hard to come into a Bitcoin DAT and beat MicroStrategy. I know that there's been the Block 11 and a few others and the Nakamoto. But yeah, it's going to be very hard to upsit Michael Saylor. And then you have sort of the Bitmain and the others in the East space, obviously UPEXI and some others in the Solana space, and pick your fucking shitcoin, and there's going to be a DAT on that. So the question for you as an investor is, okay, basically what they're doing is corporate finance alchemy. If I can get my stock price high enough, the market cap high enough, if I can get my trading volume high enough, then there opens up all these institutional investors who are allowed to buy the debt and equity derivatives that I can sell. And the higher value of my stock, the more crazy shit that I can offer, which basically allows me to, positively accrete Bitcoin or some other shitcoin on my balance sheet and thus benefit equity investors. So it's a game of size and scale and distribution. And this is what Michael Saylor has showed us, is that you have a universe of underperforming money managers or indices that want the Bitcoin risk, that amazing volatility adjusted performance, but are not allowed to buy Bitcoin ETFs because they're considered usually currencies or commodities, and that's not within their mandate. They're not allowed to buy Bitcoin and custody it themselves because that's just not what they do as a money manager. So they can only buy public equity companies. And so if you're able to pitch them a public equity company, but has this crypto underlying, then they'll buy whatever you're selling and they'll pay $2 for $1 or $3 for $1 or $10 for $1, whatever. They don't give a fuck, right? They're just following rules. And so that's the game, but it's a game of scale. And there's only going to be one or two per each category. And then obviously, as we progress further in the cycle, the newer issuers are going to resort to riskier forms of corporate financial derivatives to generate positive equity price performance. And that's what will get people into trouble when the prices start falling. And so I think that there'll be some massive DAT debacles at the bottom of the cycle, right? FTX failed at the bottom of the cycle. BlockFi failed at the bottom of the cycle, not at the top of the cycle, not when we're on the way down. But when we have the most despair, when Bitcoin's already down 70% from $1 million or whatever it is, right? That's when these companies go belly up and they trade at massive discounts. And there'll be interesting opportunities for arbitrage funds in the public markets around the world, buying these into the discount and then liberating the crypto from the balance sheet.
Ultimately, Hayes' vision is one of a spectacular boom followed by an inevitable bust. While he foresees absolute Armageddon at the end of this cycle, he is adamant that we are nowhere near that point. First, we must experience a face-ripping rally as every major economy, the US, Europe, Japan, and China, is forced to engage in competitive money printing. The political incentives are aligned for massive stimulus and credit expansion, and he believes the credit is going to flow directly into assets like Bitcoin. His message is clear: do not get shaken out by short-term volatility. The macro tide is overwhelmingly in one direction, and it is about to unleash the greatest risk asset rally in modern history.